So remember the other week we talked about price is reaching for this monthly fair value gap, even below, because at least we are reaching for discounts in this price range.
Yeah.
So that was what we discussed. And basically last week we managed to carry the trade down, and this is a new week now. So in this new week, we can see from the weekly perspective, if you change to the line chart, yeah, we did have like a little bit of structure, but it's not that clear. But let's go back, and we have like the daily time frame right here. So on this daily time frame, it's a clear range. We can see our range. So the last range that we do have in this market is from this high to this low, right? And if you flip this range, we are looking at our premium and discount. In this case, we are looking for the premium point of interest. So what I did was I have to identify some area where price may likely reject. And if I see a rejection, it's going to give me a huge confident that price is going to turn around here. I don't need price to trade back all the way up for price to turn around. So I'm looking for a place where institutional trader will reject price, because they are the one basically who are doing all of this. So rejection is telling you that rejection is telling you that that price, that key level is holding. And now, what do we see today? We have, first of all, we have this 3 key level. We said we want to see rejection with this 3 level. If you were to trade this thing just like straight away today, because there is something I still want to let you guys know, you guys should pay attention very well. So when we say price is fractal, we are basically talking about like what happens in the lower time frame happens in the higher time frame. Just same thing. And we're talking about market like circle within just the trading like space, right? This market is like, it's just repeating the same thing every time, just in circles, right? So basically, I knew price is going to buy up, and I want price to reject any of this level. Remember, these levels, they are in our premium area. So you guys can ask, how do I derive this level? Basically, if I go to my line charts, I'm using those key levels like this V shape, V shape, V shape like this for my key level, and open and close, basically. Open and close like this candle right here, it closes right here, this one open. So these are key level. So we know it's going to take the whole day before this price will close as a rejection, right? But if you don't want to wait for that day to close, what you can do, you can go to the 4-hour time frame. So right here, this was our first level. You can see 4-hour time frame, blew past it. It didn't reject it. I will leave it for now. Then this was our second level. You see how price traded into that level, it rejected that level, but it failed to shift market structure, which is very, very okay. Then what happened? Price traded up again. Now we rejected this level. Then overall, the daily has rejected this 3 key level. Which one are you picking? This is the question. But still, it doesn't really matter which one you are picking right now, because after rejection, we want to see a shift in market structure, or whereby candlestick is engulfing the other candles. Do you guys understand what I'm saying?
Yeah.
So in this 4-hour, for example, I can take all of this out. What I want to see in my rejection from like lower time frame, especially if the daily key level is, if I marked out my daily key level and I want to trade straight away, I want to see a rejection from the 4-hour. And I'm not talking about like market went there, reject like this. I want to see mostly, for example, because this is bullish market, like we're trading higher, I want to see a bullish candle rejecting my area. Of course, candle that rejects your area then turn bearish. It's okay, but mostly I want to see bullish candle rejection. So I picked this area. I left this area because it was this green candle that rejected this area. So this was what I wanted. Now, if you look, if I also separate this area like this, you can see from here backward, I can just do like this, and backward like this, go to the 1 hour time frame. When price had rejected that first area, let me take this one out. There was no clean shift in market structure because basically this is the last bullish structure. You can see price was consolidated around here, then moved down. Then price now went higher to reject that level. You see, after that 4 hour rejection of that upper level, that is when you have a shift in market structure, a proper one, a proper shift in market structure. This is what? From the what? This is from the 1 hour. Now, I'm going to go back again. We have a daily key levels. We marked out 3 daily key levels, 1, 2, and open and close. But all I was waiting for is for me to see a rejection in price, then shift in market structure or engulfing candle, because engulfing candle is like in 4 hour or 1 hour, could be a market structure shift in other lower time frame anyway. So all I was waiting for is a rejection. But like I say, I don't just want to wait for like a rejection in the daily because it's going to take the whole hours to reject that candle, the whole day to reject that candle. So what I can do is scroll down to a lower time frame, right? So the lower time frame I want to see that rejection for is the intermediate time frame, which is the 4 hour. So this 4 hour show a rejection from this level. That's why I was like, okay, yeah, I like this level. So what do I need to see now? I need to see a shift in market structure where from the 1 hour time frame. You can see 1 hour shift to market structure. Now, what I was telling you guys is that markets repeat the same thing every time. If our weekly time frame is going to be bearish, sell off, we want to see Monday candlestick trade higher into a point of interest and reject that point of interest or something. Then Tuesday, maybe before the day end, price can give us a setup or not. Tuesday can literally take the previous day high or take some kind of liquidity. It could be like session liquidity, any kind of liquidity, and give us a setup. If we cannot retrace back to that setup that day, then Wednesday might retrace to that setup, like we call it like, retrace back to the zone, the range that was created within Monday and Tuesday. Then we start selling off. Basically, this Monday have traded into a point of interest, reject, and gave us a setup. Now, what is Tuesday doing? Tuesday is trading back into that range of Monday. What? It wants to trade into the point of interest after a market structure shift for continuation to the downside. Now, this is how circle works in the weekly time frame. Monday, we trade higher. Probably Tuesday, if we didn't get to our point of interest, probably Tuesday, we also trade higher into our point of interest, then reject that point of interest. Then Wednesday, or probably after rejecting, it will give us a setup like this, like market structure shift or candle rejection, whatever you are seeing. Then Wednesday, we will see like the expansion of the week. Then continuation Thursday or either Friday, retrace a little bit or continue going to that direction. That's how it works. And the same for the daily. If you want to trade like intraday trade, so if the day is going to be bearish or bullish, for example, a bullish scenario, you want to see price trade down during Asia section, then you see London take Asia highs or low as a liquidity form, probably trade into a point of interest like fair value gap or any other thing, then you will see a move to the upside in London and in New York. That is basically the same thing. So imagine 3 things for me. So it's the same as the weekly, Monday, Tuesday, then you see Wednesday, the real expansion will come on. So in this case, we have the daily rejected right now. Now I'm using the daily. I'm using the daily now. So daily has rejected this three area, but we keep this one because it's still the like it's like it goes way upper in the premium area. So we keep this level, and because the 4 hour also rejected that level, it didn't reject the rest of the level. So we have this 4 hour green candle rejected that level. So that is why I prefer this level. Now, as 4 hour rejected that daily level, what is it showing us? Because you guys have to understand, right? Because first of all, the reason why we marked out that key level is because we wanted price to what? React off that level, reject that level, to tell us that the selling opportunity that we are looking for, institutional trader or institutional are respecting the same level. So it's just a confirmation. So this 4 hour is an earlier confirmation of that daily key level. Plus, it took the whole day to reject that level. Does anybody understand what I'm explaining?
Yes.
Not really, sir. Can you come again?
What you don't understand? You're asking me to come again. What you don't understand?
You said the 4 hours have to reject the
The-
daily candlestick,
what do you mean by daily candlestick? Daily level.
the daily level.
So this is simple. You have two choice, and nobody is going to tell you how to use that choices that you have. Now, you can choose to identify the key level, then relax, forget about the level, wait for price to trade into that level and reject that level, especially the daily. You can choose to do that. And if you are the kind of person that is looking at the market every time, today was Monday, then you can basically go down to the 4 hour, see how when at the time when price traded into that level, see how price react off that level. Because the 4 hour time frame is the closest time frame to the daily time frame, intermediate time frame. So it's a higher time frame. You want to see a reaction, a rejection of that level. But for some people, you can just be patient and wait for the whole day to trade and see if we traded into that level and reject that level. Then you as the person who waited for the whole day, then you come on Tuesday because you already saw what you were looking for. On Monday did that for you. Then you can come on Tuesday, look at the market, whether from the 4 hour or the 1 hour, to see if there is any market structure shift that is aligning with your higher time frame structure. Because what is your higher time frame structure doing? Your higher time frame structure is bearish. You want to see intermediate or lower time frame structure also turn bearish. Then that aligns with your higher time frame structure.
Yeah.
And when did that occur? It was at the point where price respected your key level. That is when the market shifts structure. Because if you look at this market right now, for example, this market was going high, high, low, high, low, high, then market shift structure right here.
Yeah.
So did you see price shift structure after getting to this area? No. Or after getting to this area? No. But price decide to shift structure after tapping into the correct key level, which you also
Mhm.
identify yourself. That is when price decide to shift structure, then telling
Mm.
you that now the higher time frame structure is bearish. Now the lower time frame structure is also bearish. It's time for price to continue going to the direction you want price to go.
Mhm. Mhm.
Do you understand?
Yeah. Yeah. Thank you.
And Sherry, do you understand?
Yeah.
Okay, because for you to be able to trade or like you know you have to first of all understand what are we really looking for? You start from the daily or the weekly. You look at the trend, and if you have a range in the trend, identify the range, wait for price to trade into your premium or discount of the range, depending on where the trend is going. If it's uptrend, you wait for price to pull back to what? Your discount. If it's downtrend, which is bearish, you wait for price to trade to where? Your premium, so you can act when price reacts. In this case, price have traded into our premium point of interest right here. And what happened? It reacts. It rejects that level. What is it telling you? It's telling you that institutional traders are also respecting that level. Instead for me to wait for this daily, like to see this confirmation, if I was looking at the like intraday trade, like just following the market throughout the day, I can see right here. What this tells me is that price has respected that level, and I can do multiple things to this candle rejection right here. But I'm not going to show you like talk towards that, because you have to go to a lower time frame or something for you to be able to like see something. So usually when you see market reaction like this is telling you earlier that okay, price is respecting that level. That's why I told you you can go down to the 4 hour, you wait for 4 hour to reject that level or something, because of course 4 hour can reject that level and it can just consolidate, or it can shift the market structure or something. It just depends, but basically this is what I mean. You wait for rejection, and you can go to the 1 hour time frame to look for a shift in market structure. Like I was saying, this candlestick, after market has rejected price, you could have entered or trade this market down. I mean, you never know where this market was going to head to anyway, but you know it's going down, but you don't know if it's going to go down straight or it's going to have a pullback again. So you could have traded just this one. If you are the kind of person who wants to trade, this was the confirmation to trade, but you can go down to probably like lower time frame to look for an entry. So you can see this level right here. This is the lower time frame, like 5 minutes. This was the time that price traded into this area. Now, if you also want to follow the structure in this time frame, you can literally read. That's why I told you guys, you can like go down and just follow the structure or something. You can go like this, then price has broken this low, then price pull back, and that is where price drop. This is just what New York session. You could have taken this trade in New York session, but we are not here to discuss that. We are waiting for the big move, because this is going to take you time to figure out or understand. But once you understand from the higher time frame perspective, then you can be able to apply the same concept in the lower time frame. That is why you have to first of all understand what is going on in the higher time frame before you can start narrowing down your time frame to get like more trade on stuff, something like this. And of course, you don't even need like a noisy trade. You need like a quality trade for you to like build your account or build your system. Now, so on GU, like I said, what are we looking at? We are looking for lower prices, one price to sell. But where can you get involved in this market? That is why we spoke about the range from the higher time frame perspective, the daily range, we have it. We wait for price to trade. We identify the premium POIs that we have in the daily range. So if we identify them, then we wait for what? For price to trade into those premium range and like react to this premium range. And right here, you can see, for example, this was a breaker as well, and price is still around that level. The reason why I like to use lines like horizontal lines and stuff like this is for my accuracy, because this zone is big, I mean, you can still use it. All you need to wait for is like a shift in market structure. That's what you need to wait for in your zone. But I don't like it. I don't like to use zones, So that's why I use like just lines, I just have to like mark the correct area. And what helps me is like, okay, the rejection especially. And you can see if you marked out this like this, and you can see there is still a rejection of that level. Do you guys understand?
Yeah, yeah. I want to ask a question.
Okay.
What section should we be looking at for the rejection? The New York section, right?
Okay, correct. Section doesn't really matter, but these people, they are not dumb, they are not fool, right? They tend to do what they are doing in the right section. For example, it's either in London session or in New York session. After all, look, you want price to move from this area towards to this area.
Yeah.
How is it going to possible in only what is it called in only Asia session? Because Asia session is like there is nothing like JPY or something. This is British pounds, which is Eurozone, and
Yeah.
American dollar, which is New York section. So the volatility and the volumes will come into the market during this
Sections like
session
done,
of the day. So that is when you will see, okay,
done. Yeah.
price will likely trade into your point of interest, not Asia session. Yeah, Asia session can also do that, but I bet you when Asia session trade into that key level, price will also, if price moved away when Asia session, let's say Asia session trade into that key level right now and started selling. I bet you when London session open, London session will also come back to that same level and test the same level again.
Yeah.
That is when you that is when you will be looking for trade after all, because you have already noticed that Asia session rejected that level. Then it's just like an advantage to you anyway, because once London traded back to that level, it's like it's a kill, it's a killer. Then you can just take advantage of it. But the most important thing is that is they don't just it work according to their session, you know. So London or New York most times will be the sections that we trade into that point of interest. And when price wants to trade away from a point of interest as well, most times it will be London or New York that we also trade away from there.
Thank you.
So, like I was saying, we did identify the rate from the daily, and we identify our premium area. Then we waited for price to trade into that area and reject and give us a shift in market structure. That is basically what we are waiting for. Did we get that? Yes, we got that from what? The 1 hour. We got the rejection, the 4 hour and the whole day. And from the 1 hour right now, what are we waiting for? Shift in market structure. We did get that. Now, remember, this is what I want you guys to understand now. You see how today gave, especially in New York session, gave a shift in market structure, right?
Yeah.
It's okay. I can go to line chart, right? Right here. This is our line chart. It's our line chart. This is our what session? New York, London. Now I'm going to go back. What I want you guys to see here is, can you identify any point of interest within this zone?
Yeah.
What point of interest can you identify? Are you seeing it right here?
Yeah.
Okay, correct.
This level.
Correct.
Yeah, these are the point of interest I'm seeing.
Which one is the middle one?
No, that middle one is not among it.
Okay, okay.
Yeah, those are the
So
2 points.
basically now, you said this open and close level,
Yeah.
that is where it's in our premium. Then you said this level, right?
The A-shaped level, yeah.
Correct. Those 2 levels are in our premium. Now, can you take out your lines?
Okay, I will do that now. Okay.
There is something I want you guys to look right here. See this? After our session, which is New York session, when market shift structure, we had a pullback into a level right here.
Yeah.
We rejected, we sold a little bit down. We have this key level, and this key level, as well, even this key level. And here, it's not a problem too, it's also a key level. But what happened? We are already at from session. See, price moves down, that price push up again. What? Respected this level. You see?
Yeah.
Rejection of this 1 hour, then the other candle we sold off. But what we did do, we failed to break below this low. Now, price has closed, market closed. What do you see market is doing now? Market is pulling back. There is a reason for market to pull back. If, for example, this was the key level, just like I told you in initial session right now. If, for example, this is the key level we were going to use, price has pulled back to this key level during outside of session. He respected that key level, we move away. Now you can see price is also trading into this key level. Anyway, although this is Asia session, right? Doesn't really matter. But I'm telling you, when price trade into a point of view in Asia session or something, there is a probability that London or New York will also trade into that area just to test that area again, because basically people who trade London wasn't awake then when price tapped into that area, or people who trade New York was not awake when price traded into that area. So price always want to trade into that same area if it was like Asia session that trade into the point of interest. So now back to our point of interest in this market structure shift. We have this level. We have this level that has been mitigated. So I now believe that price is going to use this area as liquidity. Basically, these highs, they are really relative equal highs as liquidity. So what is above that area? We also have this area as well. And we have this last area. Now, it's a matter of what are you going to take the trade straight away? For example, take that one out. Are you going to take the trade straight? Okay, right. Are you going to take this trade straight away for price to continue going down? For example, once price trade into that area, we always use 30 pips in that way. 30 pips is right here. Like this. Are you going to do it like this? Whether from this level, it doesn't matter, or from the same level again. Are you going to do it like that? Or you are waiting for a confirmation in those levels? Now, it all comes down to individual traders, right? You can take it straight away, then your stop loss 30 pips from where you took the trade. That's your choice. You can also as well wait for confirmation. What is the confirmation you want to see? You want to see the same confirmation that you just saw, because these key levels are from the daily 1 hour time frame. So you can either see 1 hour rejection, or you can see 15 minutes rejection of those levels. And of course, to make it better, you can even see 15 minutes shift in market structure or 5 minutes shift in market structure. That is going to tell you that the 1 hour shifted structure, because of we tap into a daily level. Now we tap into a 1 hour level, 5 minutes or 15 minutes shifted structure again. So you are having like confirmation upon confirmation. So that will give you the morale to take the trade. Like, okay, now I think it's time for price to move. And probably in London session or New York, then price will start moving towards our direction. Do you guys understand?
Yes, yes.
Sherry, do you have any question?
No, I don't have any questions.
Are you sure?
Yeah, I'm gonna just have to rewatch the recording.
Okay, okay. And no, there is something I have noticed in this market, right? And I'm always going to keep repeating myself, telling you guys that trading doesn't even need like You don't need 10 pairs to trade. You don't need to show up in the market every day. Your goal as a trader is for you to see one good quality setup or two in a week. And that is how you will grow your account. And that is how you will become like profitable and stay long in the market. You see these people who shows up every day doing 1 minute buy, the next 1 hour they are selling. In the next 4 hours they are buying. These people are confused. This market has one bias. Either we are going higher, we are trending higher and following the buyers, or we are trending down, following the buyers. How can this market be bearish? You buy like 1 hour ago, now you are selling in 3 hours, like after 3 hours. Focus on one pair while you are building your edge and have a goal set. 1 or 2 good trade in a week. You will always find it, even if it's 1 pair you are trading. You will see 1 good trade or 2 in a week. Do you understand what I'm saying?
I
There is,
do.
there is no need to trade like 4 pairs, 5 pairs. No. When I was in Zoom call yesterday, I told everybody, this week I'm also looking at GU because it has a better opportunity. We traded GU last week. We still have we still have some position running. And what? We are going to trade GU again this week because I can see it has a better and clearer opportunity. All I need is 1 set or 2 setup from GU in this week. Then I'm good. I will come back next week again. That is how.
It give me a headache looking at all these different pairs.
It's too much. Trust me,
Yeah,
it's too
just
much.
too much.
Yeah. Even me myself, I sometimes I get tired, because the buyers you saw on, like for example, on GU or something, now you're also using the same buyers in the other pair, then you will just get confused. And price, you don't really have that so much. I don't know how I'm not going to say, like, that calmness to really look at the pair you are trading the most. Just because you want to trade other pair, you will just do your analysis so fast anyhow that to the point that, okay, you didn't get the levels right. Do you understand?
Yeah.
So I will tell you guys, it doesn't have to be GU, like for example, you can stick to just 1 pair. That is going to help you, and it will fasten your learning process. It will fasten your edge, like you trying to master your edge. It will fasten it for you. If you have any question or anything that you want to like talk about, you can just ask now and let's work on it, because if you want to say entry is just the same thing. You wait for market structure, then wait for identify the point of interest that shift the market structure in your premium or discount area, then wait for price to trade into that area and reject, or then you can also go lower to see if it's going to change flip side as well, because when price is coming there, it was definitely doing lower low, lower highs, or highs, higher lows, or something like this. You wait for price to the structure to flip again, then this is correct now, then you can just take your entry. It's just the same thing.
I have a question.
Okay.
My question is, I've heard a lot of traders say there are some factors you need to understand to become profitable. First of all, the technical analysis, for the risk management. So how like does the fundamental analysis, does it help, or if your technical analysis is right, the fundamental analysis moves with it?
I will tell you that if your technicals are right,
Yeah.
I mean, there is nothing 100% in this market, right? But I can also tell you that if your technicals is where is right,
Yeah.
100%, the fundamental will follow your technicals.
Yes. Thank you.
What do you the only thing fundamental do in this market is add volatility, volumes to the market.
Mm.
That is what
Mm.
the fundamental do.
Mm-hmm. Because some people say, the fundamental might just make the market go against you.
No.
So,
This fundamental just give volatility, more volume, to the point that you will see price will trade into to sweep liquidity and now reverse.
very fast. Oh, okay.
Let's say let's say right now, this market is bearish, right? And we have news coming out in like 5 minutes. For example, you have your point of interest right here. You can see price have not gotten here, right?
Yeah.
So just because 1 minute and price haven't gotten there, so people will start selling from here. They'll say, okay, yeah, I mean, you are right or something. Then you can see price will just spike up then before going down.
Mm.
So it just add volatility to market. It's not because maybe if that, what is it called, your if the fund up, if you get stopped out or something, that means your analysis was not right.
Okay. That's all. That's all my question.
Okay. And Sherry, are you sure you don't have any question, like anything you want to work on?
I don't, cause I kind of came in late on it, and I know you went over it, but I was still trying to get refocus. That's why I said I just have to
No, no, no,
watch
no, no. I
the
started
replay.
basically when you came on. I started basically when you came on because this is basically what we were looking at.
So you started at the week like you did last week and marked the high and low and then
correct,
down to
correct.
the daily.
So if you want, I can go back and explain this to you again.
Okay, please do, and I'm sorry, guys.
So this is basically, you can see the range I identify, right? It's basically last week candle as a whole. That is the range of what I identify, right? And looking at this candlestick, because I know this market is still bearish. So
Uh-huh.
if price is going to keep selling, we just need to pull back and continue going down, right?
Right.
Where is the market likely to pull back to is what you are looking for. That is why you knew price is going to pull back. That is why Monday bought up.
Mm-hmm.
The bought up was what? A pullback. But the most important thing, you have your levels identified
Mm-hmm.
that you would like price to pull back to before continue selling, right? That is the whole plan. And what if you flip this weekly range, right? From
But
high.
wait a minute. Are we gonna fill the candle, or are we
Yeah,
gonna fill the line chart?
I think it doesn't matter. I can show you as well. I think
Okay.
as time goes on, you people will understand like when to flip the whole move, when to just flip just the range or the candle. Or I think as time goes on, you guys will understand. It's it's not always like that. It's not always like that. It takes a lot of experience because if it's like that, right? I could have flipped this candle like this. We didn't even get to the premium. Do you understand what I'm showing you now? The previous week candle, not like last week.
Yes, I
The
understand.
other,
That's
yeah,
what
it didn't get
I
to the premium.
understand.
So these are things that you guys will learn over time. It takes a lot of experience. It takes a lot of learning for you to and like no, okay, this is when to feed this. This is not when to like when not to feed this. So I can also show you another example, right? So let's say we feed just the body to the body. You can see now we did trade into the premium, right? Right here. Just body of the candlestick. You can see now we pull back into the premium before selling off. The same thing right here. If I just flip the body here to here, you can see we are sitting right in the premium area. Do you understand what I'm saying?
Yeah.
Yes.
So now, looking at this premium area, I want you guys to look. Do you see any point of interest right here? Like on this candle right here?
Not on this time frame.
Correct. That is what I'm trying to explain to you guys. Now, what do we do? You will go down to the lower time frame. So in that lower time frame, I still left my markings right there. This
Yeah.
is the low, this is the high. I just left it. I didn't take it. So now, looking at this time frame, from this low to this high, premium area, what levels can you see in this level? Now, I can see that in this time frame, I have open and close level, one.
Yeah.
I have this level, two. And as
Yeah.
well, I also have this level right here. And I swear, this level, I mean, they are all together. So we have one, two, three, four level. But all of these are levels. What makes these levels valid is when price rejects this level. So if you want to wait for daily to reject this level, you can just wait for that day. Don't trade Monday. Just wait for Monday to finish trading. Then you can come back to your chart on Tuesday and look to see what Monday did. And right now, you can see what Monday did. Monday trade into the whole 4 point of interest that we have in this premium. What happened? It rejected the whole 4 points of interest. Are you going to keep the whole 4 points of interest? You can keep them. What are you looking for? Now you are looking for a shift in market structure from what time frame, whether 4 hour, 1 hour, or something. But in the 1 hour, if you want to align your time frame, yeah, it will be the best time frame. Now, if I go down to the 1 hour, what can I see? I already see 1, 2, 3, 4 level that was rejected, and price had shift market structure right here. Do you understand what I'm showing you guys? So you seeing price shift in market structure. Now, where would price likely trade into? Because market structure have a shift, then you will now look for a point of interest around this. If you want to use your Fibonacci again around the premium area like this, then you cannot look for price to trade back into that level probably on Tuesday, not that Monday again, because any price that trade into that place on Monday, they are going to be liquidity. They are going to get run, and before price will turn around. So if this will be the liquidity, because this is the highest high that we do have on this day before Tuesday open. Now, where is the closest level? Right here, you have a level. Now you have a level here as well as here. So these are the levels you will now be watching for price to react from. Do you understand?
Yes.
What confirms your higher time frame level? For example, this is a daily time frame. This is a higher time frame level. We have 1, 2, 3. Yeah, is four level. What confirms this level is holding is number one. Take note, a rejection of those level. Number two, after those level has been like price is rejecting this level, market structure shift have to follow. Those two things are very key. Hold on, let me go to my notes. I'm going to So right here, let me put this thing right here. Where is it? Now, let's just read. Confirmation of the reversal or of a level, of a key level, it doesn't matter. Watch for market structure shifts when price taps into the key level. Let's just say something like this. Or look for wicks rejection, small consolidation that shows absorption of orders. So basically, when price rejects a level, you want to see, like, for example, you have a level right now. First of all, what do you want to see price do in that level? Because you can have a level. What about if price trade and blew past that level? Let me see. Like this. Do you think that level is valid? I'm asking a question.
I it's valid unless it close above. If it close above,
That is
then
what I'm saying
it will
right
make
now.
it not
You have a
valid.
level and price blew past it, trade and close above it. Is that level valid?
No, it's no longer valid.
Then this is simple concept. You have a level, price reject the level. What does that tell you?
That is still valid for what you
That
see.
level is not just still valid because this is the first time price is trading into that area. And what did price did there? Price rejected that level, right?
Right.
If the price rejects that level, what does that mean to you? What does that tells you? Plus, remember, you are looking for price to keep selling. And you have a level that you call a level that you want to look for price or you want to sell from, and price is rejecting that level. What is it exactly telling you? That is my question.
It's telling you that price is still selling.
It's telling you that price is still selling. And how do you know
Yeah.
that price is still selling or is going to sell from that level?
Choke.
Because
Easy. First, you need to know these two things. Everybody is saying other block, this. And you can see some people, they will just mark out another block. They want price to retest there. And they will just take a sell. And you think that is right? Because price can blew past that other block. For example, this is another block. Why price did not respect this other block, for example, right here? Price closed below it. Why price didn't respect the other block? You must see something that will tell you that price is respecting that area. Without that, it's just nothing. It's nothing. You don't have a level, you don't have anything there. Price has to respect that level. That is your number one thing, your rules. Price has to, in fact, let me take something and put here. I'm just giving you guys this. Now, this is what I want to show you guys. Can you guys see this?
Yes.
Trading logic, step-by-step flow, right? Daily point of interest marked equals to bearish bias, because the reason why we mark this area, we have a bearish bias. Is this a bullish bias or a bearish bias? This market you are seeing right here, is it selling or is buying?
Bearish.
It's a bearish.
Correct. You already know this market is bearish, is selling. Now you have a selling bias, basically a bearish bias. That's what it means. Daily point of interest marked on the what? A bearish bias. You have a daily point of interest mark. What does this tell you? Number 2, 4-hour rejection candle, confirmation of reaction. Price rejected that area, is confirming that there is a reaction in that level. What do you want to see? A 1-hour structure shift, entry timing. It's up to you. Sell or followed equals to trade in like synchronize or whatever with the daily. You just have to wait for 4-hour rejection, 1-hour narrative, which is the market structure shift. To summarize all of this, right? You can just do like this. This is too long. I just need to break it down so that. All right, it's okay like this. So to make it easier, right here, I saw price trade into my daily POI on Monday and reject. On the 4-hour, I saw price on the 4-hour, the rejection confirmed the daily level was respected. That's it. Then on the 1-hour, price shifted structure bearish, providing my entry confirmation. Because you cannot just take a trade from any level. This alignment across time frames set the tone for a bearish move. It's simple. You have a daily level, multiple in just one arena. Look, 1, 2, 3, 4. How? We have A level, V level, V level, OC level. It's 4, even 5. Now, apart from those levels, you also have what? A breaker right here. This is 5 level. In that level, price is rejecting that area. And not just rejecting that area, you have a 4-hour rejection of one particular level there. Then you have what? You have a 1-hour market structure shift. What else do you need from this price? There is nothing. You have to have a solid narrative. A solid. Because now, look at this market coming into that point of interest. What was that market doing exactly? It was bullish. It was bullish coming into that market, into that point of interest. Right here, we pull back. Now it went higher. Once we tap into that area, we shift market. We just want market to pull back now and respect any zone that we have for continuation to for the sell. Do you guys understand?
Yeah.
Yes.
So it's all about that, what is it called? That story that you have. Because if you don't have it, it's like you are just blind, you know? Yeah, you must know market structure, all of this, because that is what you're going to use when you start going to the lower time frame. But first, you want to see a higher time frame level, that price is respecting the level. For example, from the daily, which will mark this one out. And not just a daily key level that is in your what? Premium area. Because, of course, if price wants to pull back, you want price to pull back to your premium of discount level, right? And price pull back to your premium area, then the level in your premium area. And what happened? Price rejected that level. It's a big confirmation for you. What you are waiting for is Friday on Tuesday. Now, you can also, now you have a market structure shift on this time frame, right? Things can happen. And this boils down to the trader, like I say. Either price will respect this area. Now, that is why you wait for confirmation, always. Let's say we have this area now, 1, for price to trade into, 2. And I want to ask you guys this question. What about price we trade into this area, didn't reject, trade into this area, didn't reject? Are you going to take this trade?
No.
Exactly. You want to see that reaction, that rejection. Because if price didn't reject, there is a huge probability that it's coming for what? Liquidity. Now, I'm going to take you back to notes again. So what does this say? Right here. When the market is not offering fair value, balance, right? It means one of two things is happening. It's seeking efficiency, filling imbalance, fair value gap, untested price zones, or it is seeking liquidity, running stops or reaching for orders resting above highs or low. Now, we already have, we saw a confirmation here that price may just tap into that area and start going down. But the point is, what about if price did not reject that level? Then that means it's not respecting this level now. It is going for something else. What? Probably is coming to seek this high, because now there is things that this market do. This is a trap. They want you guys to just enter off blindly and start selling this market. Then, because you didn't wait for confirmation, you just enter the trade blindly and put your stop probably here or here, and you want to target all that way. Now, without that rejection, price tag you in your trade, gave you a little profit down, sold, buy back up to stop you out, because then it's now what doing, reaching for stops or reaching for orders resting above these highs. Why? Because if smart money, the institutional trader, want to really kill people, they place orders where you put your stop loss. Have you not heard that code before? Most of the time,
Yeah, I think.
they put their orders where we put our stop loss, because they literally see that now we are okay by seeing that price has shifted market structure. So we are looking for other block to sell from. So if they sell from that other block, where are they going to put their stop loss? Right here. That is why they will say, okay, then they will put their entry right here. You have what makes you a clever trader is those confirmation. You have to wait for all this confirmation, because without those confirmation, you are just trading blindly. You must wait for confirmation, that rejection of a level. You must wait for it. Do you understand me?
Yes.
Yes.
So if you have any question now, you can ask. No question?
I don't have any questions. I think I just need to practice and probably send you a chart or so, marking it up.
Yeah.
But overall, I understand what you're saying. And I know to look for the rejection once I find my point of interest, and my key levels. And then,
Correct.
like you said, being patient.
Be patient, wait for price to reject that level. That's all. Once price reject that level, you have already have, like, let's say 20% of that whole story, then you wait for the rest percentage to occur before you take your action. What about you, Donalis?
On the story today, I have no question because it's so clear that we wait for rejection. Then after the rejection, we want to see a change of character, then we can enter for the trade.
Okay. Vasi, you?
Yeah, I'm good. It's clear for me.
Yeah, sir, there was a question I was asking before the class. Like, I do see some people say buy stop, sell stop,
I
like they'll
told
just,
you, buy stop and sell stop are literally highs and lows,
okay,
where market has liquidity. So it's
oh,
coming to this buy stop or this sell stops. So what is sell stop? You sell from here, you put your stop loss here. This is sell stop. You buy from here, you put your stop loss here. This is buy stops. In the other way, you can call them sell side liquidity and buy side liquidity.
okay, sir. Thank you, sir.
Yeah. So that is basically sell stop and buy stop.
Okay.
Mhm.